Hi there, LaunchPad family. Marriott Martinez here, and I wanted to give you a bonus session to go deeper into the MIMO worksheet. That's the money in and money out worksheet that we want all our mentees to complete during the readiness process. So that way they are ready for their mentorship. And more importantly, there's already ideas, concepts, and financial literacy coming through them even before they start their mentorship. I'll also share how the digital filing structure connects with your MIMO worksheet and connect these two important concepts together. Again, this is a bonus session to the trainings you've already taken, and this is your opportunity to have us hold your hands throughout the MIMO completion. Okay, my friends, let's get to it. Welcome, everyone, to your bonus money in and money out session. Let's do a quick recap of money management. This is learning what money in and money out transactions occur in your business accounts. When we refer to business account, we refer to banking, credit card, and other financial institution, and even third-party payment provider accounts. When you're learning how to track and categorize these money transactions, it's going to serve your bookkeeping and tax preparation purposes, build your tax-ready books, and most importantly, begin to help you build those better money management habits because you'll know what you're going to consider and categorize as money in and money out. So let's review your money in and money out and also apply the money in and money out worksheet methodology to your business. First, money in can be cash, check, credit card transactions, or money in transactions related to peer-to-peer payment providers. There's also money in transactions that are not revenue related. So they're not income generating transactions. And we gave you some examples of those deposits in your financial literacy training, and you have them here in front of you as well. We'll want to take a look at these as we start thinking through the money in that comes through our business. So let's go ahead and fill out the first portion of the money in and money out worksheet. And as a quick reminder, your money in and money out worksheet is available right inside your LaunchPad Program Readiness Checklist. You'll just click on this link and then you'll make a copy of the money in and money out worksheet. Right now, we're going to focus here on money in. When we're thinking about money in, we want to think about those transactions first that are income and revenue related. Do you do business online? And do you use payment processors like Venmo, Square, Zelle, or an other type of point of sale system? Do you do in-person sales? So would those be pop-ups? And do you accept different type of payment options at those in-person events? Do you send out invoices to your customers? So this would all be income related. Now, what about non-income related? Think about other money in that comes into your business. Have you invested money into your business? That would be an owner's contribution, not income. Have you received a loan, a grant, or some other type of transaction that is not revenue generating or received from a customer or a client? Think about all of those transactions and put them there under the money in non-income area. What's really important here is that we don't want you to put every single transaction that came through your business. We just want you to think about what the transaction is, the type of transaction flowing in your business, who it's coming from or where it's coming from. And then lastly, we want you to think through where would be that source of truth? How could you prove that transaction came in? So let's go ahead and do one example together. So for example, let's say we are working in calendar year 2026 and we have income related to consumer sales and we do online sales through our website. We have the option for our customers to pay us through Venmo, Square, and Zelle. We also do pop-ups. And so in that case, we do in-person events. And at those pop-ups, we accept PayPal, cash, and possibly another third-party provider. We also sell to clients directly, and when we do, we ask them to send us a retainer through Zelle or possibly ACH. And we also have retail brick and mortar sales, and for those particular customers, we send them an invoice through our online electronic invoicing system. So all of this is income, and this is from whom or from what we receive the income. And this would be the proof of where we could find those transactions. Always use the notes area to provide additional details to those transactions. So again, we're thinking about income from an income stream perspective. What about non-income? For non-income, we need to think about transactions that are also money in transactions, but are not revenue generating or income related transactions. So for example, I've invested into the business as an owner and I deposit that money straight into the account. I also received a loan or maybe even opened up a line of credit and went ahead and cashed into that credit, and those proceeds were deposited into my bank. Those are the type of transactions that you want to be thinking about when it comes to money in, income versus non-income. Let's take a pause for a moment and feel free to even jump into our LaunchPad group and ask any additional questions, or write down your question now and go ahead and ask it in the next office hours. Now let's move into money out. Let's do a quick recap of money out. Remember, money out are commonly related to transactions like common business expenses. However, there are withdrawals and money out transactions that are not expenses. Again, we gave you examples in our financial literacy training and also right here on this slide. Let's go ahead and do a real example together. So now let's complete money out. For money out, as we shared already, there's expenses and there's non-expenses. Again, we're not focusing on every transaction, but we want to understand what money out flows through your business. So if you do several purchases through Amazon, we want you to start thinking about how you're going to be capturing those transactions. Do you have to go onto that Amazon account summary and separate those transactions? Do you visit bigger stores like Costco or Sam's Club or other types of stores where you're going to have to look at those receipts and separate the transactions? Do you have variable expenses related to your business, or do you have ongoing expenses like rent, payroll, or even payments to independent contractors? And how are those transactions flowing through your business? Now, when it comes to non-expenses, did you pull money out of the business? That would be an owner's withdrawal or a distribution, which is a non-expense. And one of the trickier transactions is when you're paying your credit card from your bank account. That's not an expense. That's just a transfer from your business operations account to pay off a credit card. So think about those transactions for a moment, write them down, or even write down some questions that you can ask us in our next office hours. And now that you've completed the money in and money out portion, the statements are already done. You've been thinking about where that source of truth is coming from. What are those institutions, those vendor accounts, those bank, credit card, and other accounts that you are going to be researching and downloading the information to prove these transactions? That will be completed here in the statements area. Now, how does this tie into the digital filing system? Remember when we covered moving from that filing structure concept and even this money in and money out methodology to building a digital system? What we want you to think about is that as you're doing this work, you are brainstorming that structure of your documentation. You're separating accounting transactions from taxes transactions. So that's why it makes perfect sense to have two folders, an accounting folder and a taxes folder. You're also doing the work of building out that list of source of truth when you're completing your money in and money out worksheet. All of your data is right there on that worksheet. That's why it's a seamless process from going from your money in and money out worksheet, step 1, to moving into step 2, which is building out your digital filing system. So here at LaunchPad, we want to set you up for success. So we're giving you an example of a digital filing system template. we're going to use the methodology that you've already learned around the digital filing system and the MIMO worksheet. So remember the accounting and taxes folder. Here in your digital filing system, you can create your calendar year 2026, for example, accounting folder, and 2026 taxes folder. Inside the accounting folder, you'd have your money in, your money out, and your statements. Inside money in, think about the income streams that are coming through when you're thinking about money in. For non-income, think about transactions that are clearly money in transactions but are not revenue generating, like grants, lines of credit, loans, and your own owner's capital transactions. When it comes to money out, think about the expenses that run through your business. And when you are building the file structure, think about those transactions from a monthly basis. So here's an example of January 1st, 2026, for example, and then you would go ahead and do a folder for each month. Also create some folders for your larger expense transactions like outside contractors, payroll, or travel, for some examples. Also, when it comes to money out, think about non-expenses. So these are purchases for your businesses that would not be an expense, but will definitely be posted inside of your books, like assets on your balance sheet or liabilities on your balance sheet. Owner's withdrawals, so money you're pulling out of the business, or even liabilities like sales taxes. And then lastly, again, thinking about your business from a business calendar year, you have your money in, you have your money out, and then you'll have a folder for all of your statements. You can create folders in your statements folders, for example, by saying new folder, and then think about the different institutions. For example, bank statements should absolutely be separated from credit card statements. So you'd create a folder for bank statements and another for credit cards. That's just another example of how you'd build out the statements folder. And now that you have completed your MIMO worksheet and understand the connection between the digital filing system and the MIMO worksheet, you are ready for what's next. Complete your MIMO worksheet, complete your LaunchPad program readiness checklist, and schedule your live interview. We're so excited to get your mentorship started. Hey there, you just completed the MIMO worksheet. So now you can either use this worksheet and come back to one of our open hours and show us what's come up for you. And of course, you'll want it ready for your interview and to show your mentor on your first session. Again, congratulations for completing the worksheet, and we'll see you very soon. Bye for now.